So, as I said, the difference between success and failure is knowledge, and we give you the tools, the knowledge, the skills and the tools to achieve the outcomes you desire, and Brightwater helps you to identify and maximize the possibilities in your business. We offer a series of different opportunities, and tonight I'm not going to talk about these in depth, but the Business Improvement Toolbox includes workshops or presentations like tonight, and a workshop that I'll mention at the end of tonight as well, a 6-month management education course equipping you to grow your business, and our flagship program called Business Development, one-on-one coaching to take your business to the next level. There is an offer for you tonight, and I'll repeat this at the end of the evening, but we're offering to those of you who've taken the time to come on board tonight and spend the hour with me talking about budgeting, I give you the opportunity to do this business health check. So if you download the notes, this is where you can access it, and you'll notice it's one designed for ATFA. It's designed to review the key areas of your business. A report will be compiled providing a high level of insight into these key areas, and the report is presented to you one-on-one in a meeting at a mutually convenient time. I think Jackie mentioned that there was someone from New Zealand. We can do it by GoToMeeting or GoToWebinar, and it is valued at $9.55, and you'll get great value out of it. If you want to follow on from tonight, simply complete the business health check online, and we'll be in touch to present your report. We're here to talk about budgeting, and the first question, and Jackie did the poll, so we've got about 7 people on the webinar at the moment. Have you done your budgets? So
the poll,
Jackie,
100%.
You're going to share the poll results.
Yep, I've just shared it then. 100% said no.
Okay. So congratulations, because this is the beginning of a change in your business. If I can convince you of the benefit and the value and the benefit of doing this, then your business will be different from tonight moving forward. So isn't it interesting? I actually identify that there are 2 reasons for no, and the first is you don't know why. Well, why would I budget? And one of my gurus that I've followed, a guy called Jim Rohn, said with enough reasons you can do anything. So if I can convince you of the why tonight, then hopefully you'll be willing to put the time aside to undertake budgeting for your business. The second reason, of course, is that you don't know how. And I guess, and I'm not about to slam accountants, but it's something that your accountant should be helping you to do. But if they're not, then I can certainly help you to do that. Of course, what I'd like you to do, and I'm going to actually stop the webinar for just a few minutes here, and I hope you've all got pencil and paper in front of you and taking down some notes. Although I noticed that only few of you have downloaded the slideshow, but you can go on afterwards and download it if you want to. What I want you to do is I want you to actually grab a piece of paper and a pencil and write this down. This is you making a commitment to do budgeting for the first time. It says, this year I'm going to give it my best shot. Now that's like a positive affirmation. I'm not saying that you have to turn into an accountant or get it perfect the first time, because I'm sure you won't. But if you write that down, this year I'm going to give it my best shot, then you've actually made a commitment to yourself and to your business to change the way it's been operating in the past. And we're talking about questions and I'm happy to field them from you at the end, but this is the question I'm most often asked, and maybe it's one of the questions that some of you would have asked if I hadn't answered it for you here. It says, how can I budget if I don't know what's going to happen? And my answer to that is simply this. It says, create the budget and make it happen. So we're going to talk about how you do the budgeting. What you actually put into your budget is up to you. And you don't have to set yourself up for you know, with this massive expectation and fail and then say, well, see, they didn't work. I'm happy for you to create a budget that was exactly the same as last year if you want to, but this year you're going to be able to measure yourself on the way through, month by month, to know that you're on track. So let me define budgeting for you, because I suggest to you that budgeting is the process of declaring your intentions to yourself, your team, your support network, and the universe. Now, most probably some of you are going to say, is he lost it? What's he talking about? Clearly, I understand that when you document something, when you get it down on paper, you declare your intentions through budgeting. Your accountant will know about it. Your team will know about it. Your business support team, whoever they might be, will know about it. But strangely enough, the universe will get on your team. And in fact, I found this fabulous statement from a guy called Ralph Waldo Emerson, an American author and poet. He said, once you make a decision, the universe conspires to make it happen. So budgeting is about making a decision. So very clearly, understanding that you make this decision, your business changes from the moment you get this stuff out of your head and down onto paper. So let me move now from the definition of budgeting to actually a way that you can define your entire business. And tonight we're really talking about defining your business from a financial point of view, and we call it the letter gauge theory. Now, Australia Post puts out a piece of cardboard. Today the piece of cardboard has more than one slot in it, but some of you may have seen this letter gauge, and basically Australia Post tells you what fits by the use of this letter gauge. If the letter that you want to post fits through the slot, then it gets a certain amount of postage. And I suggest to you that you need to do the same thing for your business. In fact, the question I love to ask is, have you ever had an employee or a customer from hell? And I can't see your hands go up, but I'm sure that some of you right now are like raising a hand. Maybe you're raising both hands, because that's what I often see. And the next question that I ask from that is, did they target you or did you let them in? And see, what I mean by that is, because you haven't actually created the 2 centimeter slot for your business, because you haven't defined what your business really is, you've actually got a 6 centimeter slot. We call this the Brightwater gauge. You might notice that the name on the top of the Australia Post has gone to the Brightwater gauge. And so what I suggest to you is, what you need to do now is to redefine your business in terms of your customers, your team, and your suppliers, determining what this 2 centimeter slot is. And your budgets are an important part of that redefinition or defining your business. So if you want to grow next year, you want to increase your turnover from last year to this year, then that's going to define your business. If you want to do the same as last year, that's going to define your business. So setting the budget is part of defining your business. Now, I've got another webinar later this year that Jackie's going to organise for me, and I'll show you this letter gauge again, because I believe it's one of the most critical things you can do in defining your business. So I use it time and time again, and you will get to understand how important it is about defining what fits and what doesn't fit for your business, and your budgets are exactly that thing. So why budget? Well, it establishes the financial direction for your business. It shows where your business is heading. So if you do your budgets, you're very clear, and as I said earlier on, your team is clear, your support network's clear, and of course the universe as well. It helps you to identify how much you've got to spend and how much profit you'll make, how much capital you will need. So again, you know, do I need to buy new equipment? Do I need a new vehicle? Budgeting will incorporate all of that. And of course, what tax planning you will need. And yes, tax is okay, and budgeting gives you the opportunity to plan your tax. You know, tax is the price you pay for having a profitable business. And sometimes, you know, people have come to me and said, I don't want to pay any tax. Well, I go, so you don't want to make a profit? You know, if you make a profit, you're going to end up paying tax. And that's an okay thing. It's just as long as you know how much profit you're going to make, and then you can plan for the tax requirements and tax obligations. So you budget to ensure that activity adds value to your business. So, you know, it's like you're going to make sure that every single part of the activity that your business does adds value to your business. And tonight we don't have a time to do it, but in some of the other workshops we talk about how you cost your time and energy and all that sort of stuff into your business. Budgeting also gives you a reference point to check in on your progress. So knowing exactly where your business is on the way to achieving the outcomes that you want for the year. It enables you to correct when you're off course. Now that's an interesting one, isn't it? You'll notice I've said the word when off course, not if, because I can assure you there will come a time when you're off course. And when you are off course, you then have a choice, and this will answer one of your questions that might be going through your head, because this is the choice. You have a choice. You can change your actions to achieve the existing targets, because what, you know, if you've fallen below your budget in sales, then maybe you need to ramp up your marketing activity to get back on target. And of course, the second thing is that you can change the target. You see, budgets are not set in stone. And that's, again, why I think some people don't budget, because they think, well, you know, what happens if things change? Well, if things change, you can do two things. You can either change your action or you can change the budget. So, yes, they're not set in stone. They provide a benchmark against which performance can be measured. So that's really what it's about. It's about measuring your performance. And I'll say it now and I'll repeat it later on. What you measure, you manage, and what you manage improves. You see, if you don't have a budget, then you've got nothing to compare your performance with, and what you get is what you get. So there needs to be some criteria for change, though, if you are going to change your budget. And firstly, it's what's realistically achievable, because things might have changed. You might have had, you know, a really great operator in your business and he's left you, and now you've actually got to go find someone, and you can't find someone as good as him. There's, you know, clearly, as long as it's real, what's realistically achievable. So I'm not asking you to set a budget that's unrealistic. And the second is the activity adds value to your business. Of course, that's like whatever you're doing has to add value. And budgeting is about making sure that you do add value to your business. So let's continue on. There are two types of financial budgets, and the first are what we refer to as performance budgets, but you may also know them as profit and loss budgets. And the reason I like to use the word performance budget is because they measure the performance of your business. You know, who wants to plan for a loss? Well, I don't think you should ever do that. I think you should perform for profit, but what you're going to do is you're going to set budgets to achieve that performance, but you're going to do it with your profit and loss statement and all of those sorts of things, because I'm sure this will end up going into your financial accounting system at some stage, and then you can actually see it and compare it to your profit and loss. The second form of financial budgets are cash flow budgets. And whilst, you know, cash flow budgets are the most important budgets, you can't do them, you can't do your cash flow until you've done your performance budgeting. So I tell a story about one of our clients who was a concrete polisher, and he turned over about $1 million a year, or just under $1 million a year, and he took on a contract that was worth $6 million. And we asked him very clearly about how could he actually identify how he could cash flow it, and he said, no, don't worry about it, I'll be fine. Well, unfortunately, the customer was slow to pay, his suppliers stopped providing, and unfortunately he went broke. Now, I don't accept any responsibility for that, because he went off and did it on his own without clearly understanding how important cash flow budgets were. But you can't do your cash flow budgets until you've done your performance budgeting. So most of tonight will be about performance budgeting. There will be a little bit later on about cash flow, just so that you understand why we do that as well. But let's talk now about performance budgeting. So it's a realistic forecast to ensure that your business is sustainable in the foreseeable future. Your business activity adds value, and I sound like a broken record, I guess, because I've said that about 3 times. Your business will continue to be profitable. I talked about that, and I said you don't really want to plan for a loss. You want to plan to be profitable. That planned growth can be funded, and it will provide a means of measuring your progress of your business through a predetermined time. So the 2 primary considerations that you have to think about is that it must be realistic. And when I say realistic, I don't want you setting yourself up for failure. Realistic, and we'll talk about that in a minute. So you need to set your income targets, because that's really where you generate the first part of your business, your income. And then, of course, you've got to set your gross and net profit projections. I'll talk about both of those a little bit later on in brief terms. But you know, the net profit is what you pay yourself for the risk of being in business. So profit's not a dirty word. Profit is why you're in business, and if you're not achieving the profit that you should be, then it's because you actually haven't budgeted for that profit and that profit level. And the second of the primary considerations is over a predetermined period. And I'm going to show you over what looks like over a 2-year period and how to go about doing that. The first year you'll do in monthly amounts, and the second year you're going to do in a 12-month block. So once you get into the habit of doing this, you're going to repeat in May or June of every year as you move into the new financial year. You know, in fact, whilst I talk about July as a perfect time to do it, with most of my clients that I work with one-on-one, we get these done in May and June, so that come the 1st of July, you're tracking against the budgets that you've already set. So I show a little bit of an illustration here, and you'll notice these 2 areas, this is called this year and next year. And I have an expression that says what you do on the 1st of July this year will impact where you end up on the 30th of June in the following year. So I like to get you to think about budgeting in a 2-year window. But what you do is you actually chunk year 1 into monthly rests. Okay, so we're gonna do this year that says July, August, September, October, November, December. So this year in monthly rests, and next year we're going to do in one lump. Just a figure for next year, because you're going to come back in May or June of next year to adjust next year, which will become this year, and then you're going to put another year on after that. So let's just look at this line here, because wouldn't it be fabulous if we could just have a straight line? Realistically, what you need to do, and follow this line as you see it, realistically what you need to do is adjust your monthly figures to reflect your business. Now, what I do see in quite a lot of trades businesses is this downturn through December and January, and then it only just starts to pick up around February and March, and then it moves up. It might be your business. It might not be your business. Your busiest time could be December, January, and February, and you will pick them up. And then, so if you look at the monthly performance from last year, you should be able to see what trends you notice in your business. In fact, I had a Sparky who didn't like the fact that I work with, it didn't like the fact that he had a downturn in December and January. So what he did was he created a business that, a product within his business that got him going into companies and doing closed down maintenance when major organizations were closed down over the Christmas period. The way he staffed his business was by going to his good mates who had businesses that closed down over Christmas and engaged their good employees on a casual basis. They were happy to earn money, and as a result, his business had a peak in December and January because he was actually providing a service that the clients needed at a time that they needed it. So again, you get to plan your business and make it work the way you want it to be. So as I said previously, you're going to repeat this each year. Next year, you're going to, take what you wanted to achieve, go, okay, can I change that again, break that into monthly rests, and put a figure for the year after. By the way, I don't believe you have to go for growth every year. I have some clients who go, I'm happy to do the same turnover, I just want to make more profit, so we put our efforts into becoming more profitable rather than just going for growth. Doesn't matter. I know I'm showing this as growth, and of course with the increase in CPI and all the rest of it, you have to have some sort of growth, but it doesn't have to be doubling your turnover or anything. So let's think about two different approaches to budgeting, and this is a bit of for you to understand how to go about doing it. The first approach is what's called historic or incremental. And historic budgeting takes what you did last year and gets you to think about, well, what could I add to next year? And of course, incremental asks you to think about, adding a percentage to last year. So historic or incremental says, what did I achieve last year and what could I add? And so it uses last year's achievements and adds an amount or a percentage. And it's interesting. I ask most people what would they increase, and if I was able to take a quick poll now, and I won't do it, most of you would say, 10%. I ask why 10%. And when I ask the question, why 10%, you actually get to think about the second approach to budgeting, which is zero-based budgeting. And zero-based budgeting forgets what you did last year and says, what's possible? What could I possibly achieve next year? So is either one of them right or wrong? The answer is no. Both of them have a place in your business. I suggest to you that good budgeting uses a combination of both. So again, you do need to know about last year's, and hopefully you've got that you can actually, by now, you should have a good picture of what you achieved month by month last year. And because this is the first time that you're really approaching this whole budgeting concept, ask yourself, what's possible? What could I achieve next year, now it's this year, because this year I'm actually going to focus on setting a budget and going out and achieving what I want to achieve. So here are some questions to ask yourself about budgeting, and they're simple questions, but even if you didn't have a formal budget, you may have had some idea in your head of what you'd like to achieve. So how well have I done this year, and this year being the year that's just completed? Was I on or off budget, and why? So did I get what I had in my head that I thought I'd want to achieve? What internal or external influences impacted on this year? Were they one-off, or will they be recurring? Actually, I've just noticed a question from one of you and it was where's the link to the notes? And Jackie's just identified it was on the webinar reminder link that you got. There was a link to the notes, and you can download those if you don't have them now. So thanks, Jackie. I'm sorry, I should have maybe done that a minute ago. So what's the next one? Were they one-off, or will they be a recurring? So those external and internal influences that impacted on the year, were they just a one-off, or will they be recurring? And what changes did I make to the business in the past year, and how well did I manage the resources at my disposal? So when I talk about resources, they're your people, they're your machinery, they're your vehicles, they're your customers. They're all the resources that you have at your disposal. So how well did you do that? So they're budgeting questions based around performance budgeting. The next thing we're going to talk about is cash flow, and I mentioned it earlier. I said earlier on they can only be done after performance budgets. So once you've completed your performance budgeting, you can then move on to cash flow, because it's the reality of your performance budgets. So a little bit like the concrete polisher that I mentioned earlier on, you know, without a cash flow budget, he let himself way open to you know, to the end result that he got in his business. So it's the reality of your performance budgets. It shows how the impact your performance budgets will have on your ability to pay creditors as they fall due. So creditors, the people you owe money to, the impact of debtors and your collection policy. So again, if you don't get paid regularly and getting paid is an issue for you, then, you know, have a look at how that impacts on the cash flow budgeting. And if you want to grow your business, but you continue to get paid badly by your suppliers, how are you going to fund that growth? Of course, cash flow will give you the availability of money left over to spend, and spend could be on new equipment. So we talked about earlier on about understanding when if you need to invest in purchasing assets, maybe the availability of money left over to spend on taking your family on a holiday. Cash flow budgeting will also identify where cash shortages may occur. It will ensure that cash is available for capital and other investments as needed. It will identify when business may need funding in excess of a pre-arranged overdraft limits. And as I was thinking about this workshop last night, I think back to my earlier days. I grew up in a family business in the rag trade, the clothing industry, and we used to close down for 4 weeks holiday every Christmas. That was sort of when I was, you know, just got into the business, and that's the way the business had always run. But with 70 or 80 people on the payroll, imagine what we had to do every December with the bank to find 4 weeks holiday pay for the entire factory. So again, with budgeting and with cash flow budgeting, you can do this earlier on if you understand what's going to happen to your business. And of course, there's that tax word again. Ensure cash is available to meet tax liabilities when they are due. So again, cash flow budgeting has a place to play, but if each of you answered the question to Jackie's poll at the beginning that you haven't done budgets, if you don't do budgets, then you can't do cash flow budgeting. So hopefully this gives you a good reason to be able to go back and do your performance budgeting. Now, I think that budgeting is not just about cash in business, it's also about performance indicators. And I have a brief discussion with you now about a thing that I call key performance indicators. And when I finish this conversation, I'm then going to talk to you about some budgeting tools that you might want to access and use and build as you move forward. But KPIs or key performance indicators, and we talk about budgeting KPIs. And this key performance indicators are exactly the same conversation that I've had with you about budgeting for your financial performance. So budgeting key performance indicators, it says KPIs or key performance indicators, and maybe some of you have heard that expression, KPIs, are the 6 to 10 key measures that ensure you know your business is on track to its goals. And for me, the two key words here are performance and goals. You see, you need to measure performances within your business, and my conversation with you already tonight has been about financial performance. We're now talking about performance in other areas of your business that will result in financial outcomes. And the other thing that I mentioned, and this is really critical, without goals, you've got no reason to measure anything, because it's the goals that will tell you whether you're on track or off track and whatever else. So KPIs are simply a reporting mechanism. And I suggest to you that it happens in a series of functional areas of your business. And I've just picked 5 generalized areas here: sales, marketing, HR, admin, and production. One of the areas that I think that need to be managed more effectively in business, and if you employ people, it's how you manage your people. But maybe it's a link between and production that are very important. So if you look over on the right-hand side here, I'm actually going to say to you that these are the measures for each functional area contributing to the KPIs. Now, by the way, I know you don't, small businesses don't have a separate sales department, a marketing department. And someone said to me one day, I'm all of those. And yeah, as a business owner, you are across all of those. But what are the goals that you have for each of these areas of your business that you can measure and up at this level report to you, report so you know that things are working? Do you remember an expression I used earlier on? What you measure, you manage, and what you manage improves. That's the reason you have goals and you do budgets across a range of areas in your business. Now let me give you an example, if you will, of how budgeting KPIs can work for you in your business. So the first thing I'm going to talk about is setting a goal. And if you just noticed up in this corner up here, up where the words where I've actually added 10 NCM. It stands for 10 new customers a month. That might be a good target for any of you. Some businesses might want 10 new customers a minute, and others might be happy with 10 new customers a year. It doesn't matter. You just need to have a goal. So there's my goal, 10 new customers a month. Now I've done it in green because green is the color of go, and you need, if you set yourself a budget, you've then got to be prepared to take action to achieve those budget. So if you have a goal of 10 new customers a month, what do you have to do at the end of the month? Well, you got to stop long enough, and that's why it's in the color red, to see how you've gone. And look at this. I got my 10 new customers. I give it a tick, but there might be a couple of other KPIs that are not performing the way you anticipated to the goals. So you then can go and investigate those, and by investigating those, you get to you then get the opportunity to manage them more effectively, and that's actually called management by exception. So the things that were not according to your goals, then you go and manage those. But let me ask you, if this is a reporting mechanism, and that's one of my, that's my goal up here, how did I achieve that at a functional level? And if you look at above these two numbers here, I'm going to show you that marketing was set a goal of 30 leads, and sales was set a target of achieving 1 in 3. So there's my conversion rate. And again, in small business, you should have these. You should have some of these. I was doing a a sales workshop for some people today called Win More Business, Keep More Business, and one of the attendees said, my conversion rate currently is 4 in 1 and I want it to be 2 in 1. 1 in 4 and should be 1 in 2. So he wants to improve his conversion rate. But here's your conversion rate, and it will result in 10 new customers. Because I've actually got these numbers here, what can I do? I can see how well I performed. Look, marketing achieved 20 leads, sales converted 1 and 2. So at this level, I'm happy with the outcome. But at this level, I can now investigate what happened. And I like to ask the question, what do you think happened? It looked like marketing did a lousy job and sales did a really good job. But because I've got this information and this data, I can manage my business more effectively now, and I can ask the question, what happened? And just watch between the 20 and the L here as I actually add the letter Q. What do you reckon the letter Q stands for? The letter Q stands for quality leads. You see, the marketing division applied the letter gauge theory to their marketing activity, and they found 20 quality leads. So the beauty of knowing this information and using KPIs is that you can go for growth. You could say to marketing, now you got 20 this month, I want 22 next month, and 24 the month after, and 26 the month after. By the way, sales, you need to keep your 1 and 2 conversion rate stable. So you can use KPIs to go for growth. You can go for stability. And if you go for growth, this 10 new customers a month up here will change. All right, that'll go from 10 to 11 to 12 to 13 to 14, and you can actually plan for growth in your business. Now, there's another thing unrelated to this model that I'm talking to you about that KPIs can help you, and it can be in control. And one of the things I find most small businesses need to control is getting paid. That's called debtors days, and it's a subject of another workshop. It's a subject of a cash flow workshop. We talk about debtors days and how you measure that. But when you put in place controls, you bring back into your hands the control of the business. So look, what I'm going to do now is I'm going to get rid of that spaghetti all over the screen and just finish my KPIs with asking you who drives performance through your business, and it's your people or your team members. And I describe that as team members' responsibilities to various functional areas of the business. And down the bottom down here, you'll notice the letters PPI, or personal performance indicators. You see, that's a measure of performance of each individual, because it's each individual's performance that results in you achieving these outcomes that you want in your business. So I'll be happy to take some questions on KPIs at the end of tonight, but I certainly want you to think about how well do you measure the different levels of performance that happen in your business. So I mentioned to you earlier on that I'm going to talk to you about looking at some tools that you can use to build your business. You'll notice that this is last year's spreadsheet, and I didn't update it before tonight, and because we sent this off to Jackie some time ago, and I realized last night that it had the 14-15 year on it. Of course, you would set a budget spreadsheet that looked like this. On the left here is your account number. That's your out of your accounting system, whatever the account name is that you're doing. So by the way, this one is just for income projections, and you'll notice I've got quite a lot of lines for income. If your business only has one income line, then you might want to think about how you look at your income over a different range of things. By the way, most of you, or hopefully you will recognize this as an Excel spreadsheet, and then you put your figures in for July, August, September, October, November, have a total at the end here, and and create a percentage of the total so that you can see how each product, each income item will contribute to the overall income of your business. Now, this is actually called a budget spreadsheet. There's a tool that you use to support your budget spreadsheet, and it's actually called a budget worksheet. And what does this look like? This basically, and here, you know, this is a sample of one that this would talk about total income, sales, or total income slash sales, excluding GST. And in here, it says current year ending. So what are we going to put in there? 06/2016, because that's the current year that we're working on. We're going to put the full amount in here, and then we're going to write our notes as to, and you see what it says there. It says explanatory details for this year's projections. So basically, it's about putting the words to explain why you achieve, why you're going to achieve these numbers that we had in the previous slide. So these are the explanatory notes for this year's projection. And of course, remember I said we're going to do it in 2 years, so I do ask you to put a note in here, and maybe just a brief note of why you've put that different, you know, another figure for next year. And so when you come back in a year's time, you're going to remember what that thinking is. So let me remind you again, budget spreadsheets are where the numbers are put together, and budget worksheets are the areas where you write down the thinking that applies to the numbers. You know why you do this? You do this because you then don't have to remember what it was that said, why do I expect to get this change from last year to this year? And you know, if we went back to one of those earlier slides and we talked about the different sorts of budgeting, we talked about incremental budgeting and zero-based budgeting. If you decided to say, I'm going to go for 10% more than last year, then you write that figure, you write that information right in here. Because that's okay, it reminds you why you did it. And if that's what you want to do, then that's fine, but you write it down so you don't have to remember how you came up with the figure, because you've written it down on the budget worksheet. So budget spreadsheet, budget worksheet. For every line item in your profit and loss system, right, whatever your profit and loss from your accounting system has, for every single line item, there should be a note about the budget worksheet. Could say same as last year. You know, could be 10% increase, could be a reduction. I'm going to save money in this area this year. I'm going to go for a 5% reduction from last year. And I'm going to do it by negotiating a better price or buying price. I don't know what it is, but if you don't do worksheets to support your spreadsheets, then you will not remember next year or sometime during the year what the numbers were about and why you put those numbers in. And the reason I want you to write that stuff down is that once you've done this year's budgets, you don't need to look ever again at last year's. You know, it says file last year's. So you've used the information to make a value judgment for the year ahead. So file last year's information and resist the temptation to go back to last year. And the interesting one then is enter your budgets into your accounting system. So I just see Jackie's asked you to post. That's great. Thank you, Jackie. Any questions that you have, can I get you to actually write, you know, this says enter your budgets into your accounting system. Can each one of you just type into the notes panel that Jackie's given you what accounting system you use? And that'll be a good test. I'm just about finished, and because we've only got a couple of slides now to go. So enter your budget into your accounting system. If you can tell me what you're using, are you using Xero, MYOB, Reckon, Excel? Because what you're going to do now is you're going to report actual to budget by month and year to date, because your accounting system will do that. Okay, so here's a sheet, and I'm not going to spend a lot of time on this, but if you download the notes, you'll get this, a small version of this sheet, but this is a monthly reporting tool, and here are 8 areas where there's variances to budget, and that's great. I've got someone with 0, thank you. And this is this month actual to budget, and this is year-to-date actual to budget. So you actually put into the system, we got MYOB Essentials, great, thank you. You report this every month, because what was my expression? I sound like a broken record. What you measure, you manage, and what you manage improves. So where you're at variance to your budget, you sit down and analyze it over time. So here's a gift for you, because what I notice in Australian society, we're not taught to budget. We're not taught at school. We don't do it in most families. If there's someone on the webinar tonight that does it, congratulations, there you go. I've got all 3 of you now. I've got QuickBooks, MYOB, and that's great, thank you. So back to personal budgeting, it's something that I sense that very few families, very few people do, and I found this fabulous tool. It can be done by Excel, and again, here's the location of it. It's www.moneysmart.gov.au. If you download the notes, you can go on. You can do this online, or you can download an Excel spreadsheet. It is a fabulous tool, and everyone who's gone and done it has been fabulous. They've said it's just been a fabulous tool to use. So the summary of tonight: why budget? Is it realistic? Predetermined period, cash flows and KPIs, spreadsheets and worksheets, file last year's, and monthly reporting. So a little bit about that thing about Brightwater, a reminder of the special offer, and the one last thing that I want to remind you of is that for those of you, if you download the information, I'll have your address. We run a 4-hour workshop on the 10th of September on budgeting. If you're committed to making a change to your business, please go ahead and do it. All right, Jackie, that's me. A little longer than I thought, but please take it back over.
Thanks, Anthony. That was wonderful. We've got 2 minutes to go. Plenty of time. You would have seen that the total was 2 using Xero, 2 MYOB, and 1 QuickBooks. So a real cross section there. But the cloud accounting is really the way to go. Do you agree?
Oh, absolutely, absolutely. And like, I don't have a favourite, but I use Xero, and I changed from MYOB to Xero, and I love it. I think they've got it right. And I think the other 2 are in catch-up, but they're doing a good job at catching up. So, you got to go cloud.
Yeah, and I think a really good point you made was about, keeping the same revenue but increasing the profit. And one way to do that is looking at creating efficiencies in your business, so you're not spending as much. And time is money. So by having your computing system in the cloud, it can actually, and understanding how it works, can actually save you a lot of time and give you some really good information quickly, which can then help you make some good business decisions.
I agree with you.
Okay, oh, it's good. I'm glad that you do. You don't have to, but I'm glad that you do. Now, I've just got a quick question. How often should I change my budget, Anthony?
That's an interesting question, isn't it? I suggest that you should only ever do it at the halfway mark. In January, if you get to December and things have gone really haywire, then reforecast your budget. Now, having said that, if something disastrous happened in September and it was going to impact your business for the rest of the year, reforecast your budget then. But if it's just, well, I haven't quite got the sales that I wanted, and then really it's not about changing your budget every month because you haven't got off your backside and gone out and generated the income that you thought you were going to generate. So you really got to set yourself that target, and it's not about setting yourself up for failure. It's about setting yourself up for success. But you've got to go out and do it to get it. So yeah, maybe halfway through the year is a time to change.